message was get ready for a rate cut in September. Now, whether that happens or not, we'll see. Good afternoon. We have quite a week of data to unpack here today on top of a Fed press conference from yesterday that certainly has driven some market momentum from there. My name is Brandon Steele, financial advisor with Mainsail Financial Group, and our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out some of that noise along the way. And this week is certainly filled with data and market driving news. So we will actually skip our question of the week because we have so much to cover between inflation, jobs, the Fed, you name it, really, this week. Earnings is part of that as well. So to start us off, I want to come back to data point last Friday before we went into the weekend. And Friday, we had income, spending, and inflation all come out on the same day. Income was up 0.2%, spending was up 0.3%. The reality is this was kind of in line with expectations for the most part. But I think, or actually, sorry, the income was a little bit lower than expectations. So certainly something to highlight here as it relates to some of the Fed press conference items that we'll touch on here in a bit. But nonetheless, I don't think a whole lot to kind of take into account from that necessarily. However, we also had inflation data come out on Friday. So we had PCE inflation data come out, and the headline number, so again, this basically is the basket of goods, including energy and food. Headline number was up 0.1%, and the core PCE number, so now we exclude energy and food, was up 0.2%. Both of these items were right in line with expectations. So again, not necessarily a whole lot. And technically, you know, it's maybe a sign that inflation is maybe starting to stagnate a bit, you know, at a lower level. But it does bring both inflation numbers, core and headline, to 2.6% for the year over year. So again, certainly lower than it had been prior, but or, you know, looking backwards a bit. But it's still a ways away from the 2% Fed target, which will, again, tie into the Fed press conference. Before that, jobs are obviously a big factor as well. So as we think ahead, you know, the reason I'm highlighting personal income and inflation is that really the two factors as we think about what the Fed does next are around inflation and jobs. And that is becoming more and more clear as time has gone on. I'll share a little bit more here in a bit. But before we get into the Fed press conference, we also had a lot of jobs data come out this week. So on Tuesday, we had job openings come out at about 8.18 million job openings. Nothing, you know, super surprising here. And then yesterday, on Wednesday, we had ADP employment report show that we only added 122,000 jobs last month. This was a very low number. And for those who do follow us, you've probably noticed every month lately, we've kind of shared this ADP employment report with a bit of a disclaimer to take this with a grain of salt, because the last 3 months straight has now shown challenges with the labor market. And then on Friday, which is tomorrow, we'll get the employment report, and that has actually shown very different data. So it's important, but just know that, you know, it may not be the most accurate measure of actual, you know, jobs being added. And then, of course, this all kind of culminated in the Fed decision and press conference there yesterday. So probably no surprise, the Fed decided not to change rates for this current meeting. So rates stay the same. But one of the things that shifted significantly in both the statement and in the press conference kind of rhetoric was that the Fed is really feeling like they are needing to address risks on both sides of their dual mandate now. And that dual mandate is inflation and jobs. Right. So again, we've talked a lot about inflation and jobs so far. So why I'm highlighting it is because before, you know, really inflation was all that the Fed seemed to care about. And over the past 3 months or so, it has become more and more clear that they are really looking at jobs as a, you know, potential challenge, but maybe more importantly, a reason to start cutting rates. And this was very clear just in the statement alone, let alone, you know, what kind of came in the press conference to follow. So the general theme here is that there's a huge focus on the labor market, and again, a big shift in how the Fed is viewing things from just a few months back. Generally, what I'll share from the press conference is that I think that the message was get ready for a rate cut in September. Now, whether that happens or not, we'll see, right? Obviously, he kind of hedged their bets a lot by sharing as data unfolds, you know, a lot of that, you know, that type of message. But the general theme certainly seemed very likely that we could expect a rate cut in September. And he, and shared time and time again that he felt that the economy was really strong at the moment. So, as you might imagine, markets loved this yesterday, right? Basically, rate cuts coming and the economy is strong. Markets loved it. We saw a big jump across the board, really. Yields down, stocks up, you name it. But here we are on Thursday, and the markets are having a little bit of a different reaction as they had some time to kind of digest. So we'll see where things come from here. There is Fed Chair Powell will be at Jackson Hole for a big event coming up in about a month or so. And obviously, it's very likely he will be sharing more thoughts on the September meeting ahead. So definitely want to stay tuned there. That'll kind of be our next chance to see where the Fed's at. But stay tuned. Next week, we'll cover employment report from tomorrow, which will obviously be a big factor as well. And we will continue to keep you up to date every Thursday around not just interest rate discussions, but the labor market and inflation rates as well. So tune in next Thursday at 3. In the meantime, have a great weekend, and we'll see you next week.